We've got one economist perspective with us right now. He's the chief economist and also the co-founder of RDQ Economics, John Ryding. John, always great to talk to you. Let me just piggyback off of what Mike was just talking about. Do you see a recession coming, John?
Well, I don't think we're going to go into a technical recession, although I do think the second half of the year may not pick up as much as we and others had thought. But that's really not the issue. The real issue is that we never got out of the last recession in a growth sense. We've been in a growth recession, which is to say, since the recession trough 2 years ago, the economy's grown at only 2.5%, which is about in line with potential. So that's kept the unemployment rate up at around 9%. So we really haven't gotten out of the last recession in a meaningful way. We've got out of it in a technical sense, but not in a truly meaningful sense.
And it hasn't been helped, John, I would assume, or I don't want to assume, but I would think that that's what you would say. It hasn't been helped by what we've seen in Washington with this debt wrangling, right?
Well, it hasn't, but I do think that the fears that we're going to have somehow some fiscal contraction hitting the economy now were very misfounded. If you look at the spending cuts, it's $20 billion next year, it's $40 billion in 2013. Let's face it, in a $15 trillion economy, that's pretty small beer.
It is. I mean, when you put it in that context, but it's the uncertainty that all of that created, though. I mean, do you think in any way we've been damaged by what's happened in Washington, and that's going to hold consumers back? It's going to, damage the sentiment in that sense?
Well, I think it's more business sentiment that's being damaged. Why aren't people hiring in the recovery? And I think that's because there's just too much uncertainty about the outlook for taxation, too much uncertainty about the outlook for regulations. What's going to happen with health care? What's going to happen with the tax rates after 2012? What's going to happen to corporate tax reform? And is the U.S. going to get downgraded? And that's going to raise borrowing costs. All these uncertainties have been created, not so much, in my opinion, by the debt ceiling debate, which kind of opened up the Pandora's box on these issues, but the fact that we haven't resolved them. We were always facing them, but there's no resolution here. We've just, to use the term far too many times, kick the can down the road on this one. Now it's up to yet another commission. We already had the Bowles-Simpson Commission, had some pretty sensible recommendations. They were ignored. Now what's this next commission going to come up with? Because if it doesn't get it right, that will hurt the U.S. economy.
And these numbers are coming out now. Let me get to Mike with personal income and spending. What you got?
Betty, we were expecting bad news, and it's worse than that. Personal spending for the month of June down 0.2%. The expectation had been for a 1/10 gain. So Americans closed their wallets even more than expected. Incomes rise less than expected, up just 1/10. We'd been expecting a 0.2 change. And the inflation number is about the only place where we see some good news. The PCE core, excluding food and energy, this is the one the Fed watches, up just 1/10 on the month. The expectation had been for a 0.2 gain, so it means that for the year over year, we're only rising at a 1.3% pace. That's important, Betty, because if the Fed does decide to get back into the QE3 business, they're going to want to see lower inflation because they'd be afraid of pushing it higher. Betty?
Okay, Mike, thank you. And I'm looking at the board right now. You did see the S&P futures take a leg lower, now down about 12 points, not taking what you say this news well at all, which is indicating that essentially consumers are continuing to pull back and there's not enough momentum here to sustain some of the spending that we have seen. We're back with John Ryding. He's the chief economist and also the co-founder of RDQ Economics. John, just give me your initial take on these numbers.
Well, I think Mike pretty well. There's not much good news in here. I do have to say one thing, though. At least it doesn't give us a worst view about GDP. These numbers were all embedded in that miserable GDP report for last week. So in a sense, it's not news. It's so much a refinement of what we already knew about the second quarter. But the second quarter was in pretty bad shape. So I think the key thing is to look forward to income creation and see what the jobs numbers have on Friday. And if we don't see a pickup in jobs, and we're only expecting 50,000 on non-farm payrolls, if we don't see a kick back up to 125, 150,000 on payrolls, I think that we're going to be looking at some downward revisions to third quarter growth estimates.
Well, what's interesting, John, is that we've seen pretty much consistent over the last few weeks, data that's been consistent, showing that this economy is slow. It's not picking up any steam right now. But we did see jobs claims fall below 400,000. So is there one inconsistency here, or are they all pointing to the same picture?
Well, those jobless claims numbers have been the thin reed of hope for a stronger jobs report. Of course, the only problem is it's for the month of July, and the numbers get distorted in July because of the factory shutdowns for retooling, especially in the auto industry, in the first couple of weeks of the month. So historically, jobless claims indicators have been a pretty poor guide through the month of July as to what's happening. And subsequent to that, of course, we got yesterday's ISM report with a report on employment, an employment indicator that showed slower hiring growth in July than June. The real key thing, though, is we have to get income creation, and for that we need job creation. And the traditional stimulus measures, whether it's fiscal policy or monetary policy, have failed the economy here. So it really requires some out-of-the-box thinking as to what's really wrong with the economy and what we need to see to get it going forward at a more acceptable pace.
John, hang on, because Mike's got some bit more on the numbers.
Yeah, I want to bring something up that addresses what John was just talking about, the need to get incomes higher. Wages and salaries were unchanged on the month. In other words, Americans didn't make any more money, and we know that people tend to spend out of their paychecks. So without an increase there, you're not going to see growth in spending. But we did see a big increase in the personal savings rate, rises to 5.4% from 5%. That suggests to me, John and Betty, that we're seeing some nervousness out there. Maybe people were upset by the debt debate, but they put more money away last month, certainly, than they spent.
Or they're putting it in gold. John, you said just before Mike was talking about the other points of data, you said some out-of-the-box thinking. What would out-of-the-box thinking be?
Well, I think you've really got to ask, why is it that small businesses are not engaged in this recovery? We've really got a two-speed recovery. We've got large corporations, which have been doing well, and profits figures for the second quarter, especially given the economy, have continued to look fairly decent. And they've got lots of cash, and they're in good shape, better shape than the U.S. government in terms of cash on hand, as has been a popular story of late. And then you've got small businesses, which are really still behaving as if the economy is in a significant recession. And all of our stimulus measures have been aimed either towards middle-income to low-income households, or they've been aimed towards large corporations. And really there's not been much thought about what is it that's retarding small businesses. And one of the biggest uncertainties, of course, small businesses are different from large businesses in terms of legal organization and treatment under the tax code. So the big uncertainty about this budget mess, what's going to happen to tax rates in the future, really is an uncertainty about how small businesses can plan. And I think that that, as much as anything, is an important factor in holding back the economy.
Okay, John, thank you. I appreciate it. I know